Zillow shares surged over 12% today. So what exactly is going on? That's exactly what we're going to cover in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. All right, guys, I was watching the market all day today, and all day Zillow's share price was going up. You can see it right here, where there was a huge uplift in Zillow shares, and it continued the trend from last week as the shares accelerated upwards after the company reported earnings. And so what exactly was it about their earnings that caused the share price to increase so much? And it really just comes down to that the shares soared because the company has a more upbeat outlook on their business, and also they're able to sell off their homes faster than expected. And I think the main item here is that they're going to be getting better unit economics than they projected as well. In other words, I don't think the losses are going to be building up as much as people thought they were going to. And if you recall, Zillow's share price in November plunged 25% after the company exited the home buying business. As you may recall, their CEO, Rich Barton, told analysts that their iBuying business, Zillow's offers, was too risky, too volatile, and had too low of a return on equity. And so you can see the difference in the share activity here, where the shares absolutely cratered from somewhere in the $100 per share range to as low as the mid $40 per share area, and now it's surged back up to $65 per share. Now, I really like Zillow. I believe that this is a home buying app that's a consumer monopoly. I remember the days when I was looking up homes in the US before Zillow, and I absolutely hated it. So ever since Zillow came in, it's been a lot easier to search for houses in the US. And this is one of the reasons why Zillow is doing so well. They provided 2025 financial targets. They're targeting $5 billion in revenue and a 45% adjusted EBITDA margin. And of course, they're saying right here that they have a super housing app. So that's their way of saying what I'm saying, which is that they have a huge consumer monopoly. I think this app is the one that's going to remain in this market. And they'll show you their market share in a second, which pretty much proves what I was saying all along. When it comes to their housing app, you can see all the services that you have access to. Zillow's rents, you can get pre-approvals. The in-person touring I thought is really cool. It recently got released. Obviously buying and financing, and of course selling. I think where their biggest growth is going to come from is that financing, the in-person touring, and the Zillow's rental business. I think those are where they get the growth, but I'm not an expert on the business. The manager will probably tell you something different. But the whole point of me showing this is how many things you can do just on the Zillow app. So yeah, I do agree with them that it is turning into a super app. Now, they're only showing you the monetizable items. They're not showing you the other things that I find very interesting and unique about the Zillow app. For example, it saves your work address. So as you're looking at homes, it tells you how long the commute is in and out of rush hour traffic, which I think is phenomenal. They give you the scores of the schools around you. That's really cool as well. All the questions that you'd be asking as you were buying a house. So I really love the experience on Zillow as a shopper. Now you can see here, they're solidifying what I've been saying about their app being a consumer monopoly. They have 63% of the daily active users searching for homes. That's a huge competitive advantage. And I think that this stays. I don't see anything that anyone else is doing that would make me want to use their app more. And I think what Zillow needs to do is continue to figure out if those other apps are offering something interesting, unique, that is better than what Zillow is doing, and build that into their app right away to just maintain leadership in the market. I think it goes even higher than 63%. I think Zillow can turn into something like what Google is, where it's got like more than 90% plus of the searches. I think that really happens in this market. And so they did mention earlier that their target is $5 billion of revenue and 45% EBITDA margin. So how exactly are they going to get there? And they announced 5 activities that are going to get them there. The first is touring. Once again, I have used their touring capabilities on their website. It's phenomenal. Very similar to the touring capabilities that we have in Canada with our housing app as well. So very similar, and it's very good. And so I see them generating more income by offering that. And it looks like they're only fulfilling a third of the tours that are being requested today. Financing, pre-qualifications, pre-approvals. If I can do it all on Zillow, it'd be so easy to do. I'd be happy to do that. Now, that is something that can take away market share from Rocket Mortgage. So very interesting there. And then the last thing, I'm not so sure about the seller solutions that are the enhancing the partner network. I think those are good areas that they continue to have to look into, but I don't know it enough to comment on it. But the one area that I'm a bit more confident on is the integration of their services. They should be integrating services to find ways to generate more revenue per transaction. I think that's very important. So you put these 5 items together, you absolutely are able to continue to grow your revenues. And this slide really excites me because what they're really doing here is they're giving you a walk from how they're going from 2021, excluding Zillow offers, $2.1 billion in revenue to $5 billion in revenue. And essentially, the one point that I really want to point out here is that they're assuming that there's no growth for industry customer transactions, which is important because it's likely that by 2025, industry customer transactions actually decline because interest rates are going up. So there's a huge risk there. I almost wish that they assumed that industry customer transaction growth would decline, but they know better than me, so I'll leave it there. The customer transaction share is where they're going to try and get the growth here. So by increasing touring, financing, and expanded seller services, the 3 items that I actually mentioned previously, they're looking to use that to double their transaction share and add to that the Zillow home loans, the Zillow closing services, the Zillow 360 bundle services, and just general home price appreciation. They're looking to increase the revenue per customer transaction. And that gets them to almost $4 billion. And then, of course, the rentals, new and construction, and their mortgage marketplace doubling those businesses by 2025 gets them to the remainder. Now, do I think that they can achieve 24% annualized growth? I think the way that I would model it is because they've provided me a walk, I think I would give them that in my modeling, but I would just look out for a huge margin of safety. And so the next question is, can they do it? If you look at the IMT segment, it's grown significantly since 2018. However, it's not growing at that 24% rate that they're looking to grow into the future. So they're looking to grow revenues at a 24% annualized growth rate. I'm not seeing it based on their historical growth rate with the IMT segment. So there's something that they're going to have to prove out there. Now, the one thing that I would add to my valuation here is that they provide us with essentially what their excess cash is. And essentially they're saying that they're going to be able to wind down their inventory of homes in a cash flow positive way and be able to pay down all of the Zillow's offers debt with that wound down inventory. So they're not going to be taking any cash losses at least. And once you take away the convertible debentures, they have an excess cash of around 1.7 billion. So that's what I built in as excess cash in my valuation. With your own valuation, I would take it or leave it. Up to you. I took it. Okay, moving on to the model. So from here, you can see that I am building in the $5 billion of revenue by 2025. But it's weird that they're forecasting 24% revenue growth. I'm forecasting 30% revenue growth. But that is the rate that I'm using to get to that $5 million by the end of 2025. Now, with respect to the adjusted EBITDA margin, you can see that their IMT segment is already at an adjusted EBITDA of 45.2% of revenue. And so I don't know if they have to build up to it. The only area where their EBITDA margin is low is on their mortgages segment. So I've built that up slowly to 45% by 2025. Okay, now coming into the valuation, you can see that I'm valuing it at close to $90 per share. And that's using a 25 times multiple and a terminal discount rate of 11.5%. And I'm adding in that excess cash per share that I mentioned of $1.7 billion. But I don't think that they increase revenue at the rate that they're forecasting at. I think it's going to be slower. As a result, I want a large margin of safety on this stock. I personally am comfortable buying Zillow at under $50 a share. You guys let me know what you think. I'm happy to sit this one out. I know some of you guys do mention that it's almost impossible to find stocks that are trading for 50% of their intrinsic values, especially leading companies like Zillow. I agree with you guys. Investing for me is not easy the way that I buy securities. I might buy 1 or 2 stocks a year and then just be sitting on large cash piles. And so that's how I personally feel comfortable investing. I know that I'm a little bit more risk averse than most investors, but that's how I operate. So I'll leave it at that. You guys let me know what price you guys are comfortable purchasing Zillow at. So let me know that in the comments. And also, if you want access to the model, it's available to the Patreons at the $5 per month tier. And so go ahead and grab the model. download it, and switch around the inputs as you seem fit and tell me what valuation you guys get. Also, guys, if you haven't seen already, Alibaba is expected to report earnings next Thursday, and I did a really good preview for Alibaba's results, which you can get to right here.